Hey everyone, welcome in to another daily editorial here on the KE Report. I'm getting an update from Contango Ore. We're going to be getting an update on the Manh Choh production, the first batch of gold being produced there. We're also going to get an update on the Johnson Tract Deposit. This is the new acquisition that came into the company earlier this year and the start of a drill program. Also circle around to that Lucky Shot project to see what, if any, work is going to be done this year into next year. I am chatting with Rick Van Nieuwenhuyse, President and CEO of Contango Ore. Contango is traded on the NYSE American under the symbol CTGO. Now, Rick, thanks for joining me today. Let's get right into it and talk about Manh Choh. It was recently announced that the first batch of gold production came from the Manh Choh Gold Mine. Just to bring everybody up to speed, Contango Ore is a 30% carried interest in this asset. Now it's producing, Rick. What can we expect in terms of ramp up times, overall production this year, please?
No, Corey, good to speak to you again. Yeah, so we produced first gold and sold first gold out of the first batch. We had the first gold pour on the 8th of July, and the mill ran with processing Manh Choh ore through early August. I think the mill stopped around the 3rd or so of August, but then the carbon was still leaching gold until I think about the 8th or so. We sold our share of the sale of the gold and the silver, just a little bit of silver, it's mostly gold, was just over 32 million for our 14,700 ounces of gold sold for the first batch. We still have about 6,000 ounces of gold in the left on the carbon that wasn't processed or fully processed. And so 1,800 of that is our 30% share. We'll report that. That'll go on to our second batch reporting, which will take place in September, October timeframe. And then we'll have a third batch processed in November, December timeframe. So we'll get 3 batches this year. We're guiding to 30 to 40,000 ounces of total production and for the year, if you will. So it's been a great startup. I think everything is going according to plan. As the first batch, we were targeting to get the batch up to batch processing the mill rate up to about 9,000 tons a day, and we achieved that. We didn't run at 9,000 for the whole month, but we started at 2 to 3, and then 3 to 4, 6 to 7, and then finally got to the 9 to 10,000 tons per day rate for the mill at Fort Knox. So I think it was a very successful ramp up. We produced more gold than expected in terms of the feasibility study plan and our former guidance, and we had better than expected recoveries. Again, I'm comparing to the feasibility study, which was 90% recovery. We actually ended up with 95. So we got 5% better recovery on the gold. So yeah, it's been a very successful first batch, and we'll look forward to batches 2 and 3 later this year. We don't have costs yet, and we will be reporting on those on our Q3, which should be, I think, coming out in early November. So we think we're on track to be plus or minus what the feasibility study all-in sustaining costs were, which is 1116. Yeah, I kind of break the costs down into 3 or 4 buckets. Mining and the admin that takes place at Manh Choh, we're on budget there. The transportation being the second one, and we're on track there. We're on budget there. And those are each roughly a third of our costs, mining and administration being one bucket, transportation being the second, and then the final one, processing, which includes the toll to Fort Knox. We don't have those numbers yet, and that's what we'll be reporting on in November timeframe. We think we're plus minus on track there, and we'll look forward to reporting on that when we have those numbers.
Okay. Yeah, that's one thing you and I were talking about, when we will see some of these costs. But just to date, in terms of that last news release, August 19th, the company's share of gold and silver sales totaled over $32 million. So this is generating some at least nice revenue numbers to start with. I guess big capital costs. Anything that you can tell us as this mine continues to produce that Contango would be responsible for? Any major cash calls coming?
Well, I mean, we'll have cash calls for ongoing, but the way the process works is we sell the gold, and the money actually goes to the Peak Gold joint venture and then gets distributed to us. And we won't be able to report on that again until November timeframe. But our costs are running more or less $8 million a month at the mine site, and for the mine site and transportation. and it's $8 million per month. So these are rough numbers, but there'll be a fair bit of money left over from the $32 million that we'll eventually get as a dividend. So we're in really good shape. This mine is working well. The average grade in the feasibility study was 8 grams. We were delivering over 9 grams to the mill in the first batch. And as I said, the recoveries are a little better than what were in the feasibility study. So we're starting out on really good footing here.
So if you're guiding that 30 to 40,000 ounces attributable to Contango for this year, what about years out? 2025, even further out, and mine life wise, what sort of forecast can you share with us further out than just this year?
Yeah, well, we have to stick to the feasibility study plan, and the guidance is 67,500 ounces our share of production per year for the next 4.5 years. So that's what the feasibility study has in it. Obviously, we're exploring at Manh Choh, and we fully expect to find some more ore and extend the mine life there. But that's our guidance for right now, and we'll, as I said earlier, we'll update people on the all-in sustaining costs once we have all those numbers come October, November timeframe.
All right. Well, let's move over to that Johnson Tract Deposit then. This was the acquisition that was closed really not that long ago from High Gold back in July. Shortly after that acquisition closed, at the end of July, you announced the start of the surface drilling program. This program, about 3,000 meters in 20 holes. Take us through the goals around this drill program, please.
Yeah, so we didn't waste any time. We got going right away, and I have to say the Johnson Tract crew is doing an awesome job. We started up in sort of mid-July to get camp opened up, and it was a heavy snow year, so we probably couldn't have really gotten started too much earlier, but our schedule was really dictated by getting the deal closed. So we've got a 3,000 meter drill program. There's sort of 2 or 3 main aspects of the program. One is it's just typical infill that we're doing on the upper part of the ore body that is exposed to the outcropping ore body. So that upper part we're drilling from the surface. It dips steeply and it dips underneath a big mountain. So the other 2/3 of the ore body, we need to get underground to properly do the infill drilling on that. So the other part of this year's program is to collect all the information we'll need to permit the underground mining to put the tunnel in the footwall of the ore body so we can get that feasibility level drilling done, and along with a whole host of other work like metallurgy and geotech and all that. So yeah, that's the other big thing we're doing is collecting all the geotechnical and environmental information like acid base accounting, metal leaching, acid rock drainage, all that kind of stuff, so that we can get the underground permitted. And then the last part of the program is all the surface water quality data, both surface and underground water quality data, amount of water, where the water is going, so a good hydrology model, and then the water chemistry as well, so that we can put all that information into our permit application for building the underground. And then the last thing we're doing this year is finalizing our 404 permit, which is referred to as the wetlands permit. It's issued by the U.S. Army Corps of Engineers. They have jurisdiction over all wetlands. And that permitting process is just wrapping up. I think we'd previously given guidance that we expected to have the permit by the end of the year, and I think we'll expect to have it by the end of the month here. So we're doing well on that. So, and that's a permit we need to build the road between the campsite and the existing campsite and the portal location for the tunnel. So first thing, before you can build the tunnel, you got to build the road. So just kind of getting things sequenced here. And like I said, the first step was getting it permitted. I think we've got nearly have that in hand. And then we'll line ourselves up so we can construct that road over there in 2025, get the underground permitted in 2025, and then start the construction of the underground in 2026. That's the plan.
Okay, that's a good overview. I was going to ask for a general time frame, but that is pretty straightforward there. Rick, how much capital do you think the company will need to allocate towards this Johnson Tract deposit to move it through to maybe beginning of construction?
We don't. So we have a PEA. That's actually the other thing we're doing currently is working on a PEA that will outline all those numbers. So that we'll probably have that done by the end of the year. I'm hoping that we can get that out before the end of the year, and that'll give us some good guidance on the sort of the total costs. We are doing that on a DSO model, so mining on site, run of mine, transportation of the ore to an existing facility to process the ore. So we'll have all those assumptions sort of built in there. In terms of next immediate steps, we're finalizing what road construction would cost over the next 2 years. It's in the 15 to $20 million range to get the road and the portal site area outlined and have a laydown area in front of the portal so you can mobilize all your equipment to that area. So that's a rough number, and we're getting contractors on site this month, and we'll get some more firm numbers here as we go along. But that's probably in the ballpark.
Okay, let's also talk about that Lucky Shot project then. I know you do have your hands full here with Manh Choh in production, but Johnson Tract, that's taking a lot of your time in terms of the drill program. What about Lucky Shot? What work, if any, will be done here or next year?
Yeah, so this year we did put Lucky Shot on care and maintenance. We were thinking we might get some surface drilling done there, but just to be prudent and before we had the actual production out of Manh Choh, we didn't want to spend money that we might not have. So we decided we'll just delay the surface drill program at Lucky Shot. We'll wrap it into next year's program to where we can do both surface and underground drilling next year. So in general, we've got about a 3,000 to 5,000 meter surface drill program to do at Lucky Shot next year and a 10 to 15,000 meter underground drill program. And when I say next year, the surface drilling program will definitely take place next year. The underground drill program, we won't probably get all the way through that next year, but that's over the next 2 years. And with that, we should be able to develop a mine plan. And again, at Lucky Shot, I'll remind everybody that we are fully permitted there, and we have the underground access already built. It's interesting because it's very similar to the plan for Johnson Tract, except we've got Johnson Tract, we have to permit the underground and we have to build the underground. So Johnson Tract is, like I said, about 3 years behind Lucky Shot. And so we made the decision to not do the work at Lucky Shot this year because it really didn't change the overall timeline to production for Lucky Shot. We figured we just get all the work done next year in terms of both surface and underground drilling there. So we basically now you put the two projects together, and obviously with Manh Choh in production, that's kind of on its own. We do have an exploration program going on there that's a little shy of $5 million, and we'll obviously look forward to reporting results for that later in the fall here. But with our 5-year plan to get Lucky Shot into a mine production decision, and then 2 to 3 years after that, we get the Johnson Tract. It's a good solid 5-year plan to have between now and say 2030.
All right, Rick, before I get you out of here, where does the company stand in terms of cash to move all of these initiatives forward?
Yeah, we just released our Q2 results. We had $24 million in cash. Now, obviously, since then, the production was in Q3, so we've added $32 million of gold sales to that. And obviously, we've got ongoing costs at Manh Choh in terms of mining and transportation, et cetera. So we're in good shape. We're a solid company from a cash flow standpoint at this point in time. We'll have our formal Q3 reporting in October, November timeframe. So we'll look forward to that. We'll have our all-in sustaining cash costs there and all that. So, but I think things have gone according to plan, and we're selling gold and making money, and it's been a good year.
Oh, it's been a big year for the company. Now having Manh Choh in production and getting those revenues coming in. Rick, I really do appreciate your time bringing us up to speed here. Again, Rick Van Nieuwenhuyse, President and CEO of Contango Ore. I'll post a link to the company's website in the show notes. Click that link, visit their website, send me any questions you have for Rick for any of our future calls. Rick, thanks again for the update today.
Corey, thanks.